All right, Ken Orange Day Trader back with a deep study on entries, exits, and just trading the weekly range. So let's get going. So we have to remember that when we trade the weekly range, the beauty in trading it is that you have a bias for pretty much the whole week, right? So how it needs to go is as follows. You need to first identify candle one and candle two, and then you draw your range. I use a fib with only the 50% line isolated. So you'll see right here, a 3-line fib. I don't need any other levels. Like so. Okay, so we got candle one, candle two. So that's what you're looking for going into the next week. So you'll see this and then this, and you're waiting for this candle right here to play out. Now, the beautiful part about this is that when you have the range of candle one isolated, it gives you a guide as to where your best entries could be. The best entries when you're trading candle range theory are above the 50% level of candle one, which is the fib. The fib just isolates that. That's all it's supposed to do. That doesn't mean that you can't trade below the middle of candle one. It just gives you the best odds and greatest return up here because typically you're looking for price to close out the range, which is at the bottom here. Now, anything above the bottom, which this one dropped 400 pips before it came back, so that was just insane. But anything above that is great. Take it as a bonus, but generally speaking, you're going to look to take profit at this bottom range level here. So now that we have this range isolated, again, when we go back in time, and maybe it might do it, maybe it won't. Okay, well, go a couple days here. Yeah, it ain't. It's going to play out. But when you're looking for this day to come out or show up, you can really start trading around Asia. So what we're going to do now is if we just go down to a daily chart, we'll take a look at how this week panned out. So this day right here, which was Monday, did give a trade entry at the high of the day, but Monday didn't move too much. Monday can be a trap day. So one thing you can do is this: if you want to take Monday off, you definitely can, or wait till the end. But generally speaking, you would look for Monday's high to hold, especially if it forms the high of the week. So let's just say if we took Monday off and started on Tuesday, which is this candle right here, let's drop down to the 5-minute chart. Once I select Tuesday's bar, like so. And let's see where our best entry would have been on Tuesday. So on Tuesday, let's see here. Yeah, that was the daily open right there at 5 o'clock p.m. And let me bring up the fair value gaps. Like so. Now, I like for fair value gaps to be rejected, price to retrace into it and then run away from it as a confirmation that, okay, it's a solid gap. So price started running away from this gap, this first gap that was made, and that would have been an entry at about, what is that, 2025? So at about 8:30, we could have taken our first entry right here. So a short position right here on this candle open. The safest stop loss is always going to be above the high of the day or even the high of the week, either one of those. So that's about a 26 pip stop loss. But so you have that option. If you want to put it above the high of the week, you can do that. Or if you believe that the high of the day will hold, you can put it above that. So that would be between a 20 pip or a 25 pip stop loss. Okay. So in terms of scaling into the trade, you have several options. You can just enter when another candle shows profit. You can wait for another fair value gap to form. You can look for another liquidity sweep. It just depends on what you want to do. So in this case, let me put this back. You can put the take profit, and notice too, we're above the red line right there. I like to actually leave the take profit open. I don't set a take profit, okay, because I don't know how far price is going to go. But if you did, if you want to just set a take profit, generally your take profit should be around the bottom of the range. So around there somewhere, okay, because this gray line right there is the bottom of the range. Okay, so there you go. Now, even though that's a 1 to 5 or 1 to 6 almost, every trade's not going to be like that. So I don't want you to thinking, okay, if I trade the weekly range, I need to try for 1 to 5 or 1 to 6 risk to reward. I'm not saying that. What I am saying is that the moves can be bigger because the weekly range by default is bigger. So, you got to be patient with it because it didn't hit until later on, but it did eventually hit as we saw. Second entry though could have been off of this liquidity sweep right here. You just need a signal to say, hey, look, I think price could be going further. And you set your take profit, same level, but your stop loss around the area that you think price is not going to revisit. So it could be the same as the first one, which will be up here. That would be a 43 pip stop loss in this case. Or you could even set this to break even and have this one say above a prior fair value gap. You have options. This is just a part of dynamic risk to reward ratio. It's up to you. Because as we can see, this price did not come back. This would have been a free trade. And then whatever you risked here just would have been all profit. And then this one here might have had a larger profit potential right there. But this next entry was at 11 o'clock p.m., 2300 hours. And then just did a straight drop. It consolidated a bit and then came back. So let's let this play out a little bit here and then see what happens. Now, don't, of course, be alarmed when price does retrace because it will do so. And the thing is, when you're trading the weekly chart, if you just want to set it and forget it, you can. I do know that the yen pair did have a retrace day. I think it was on Wednesday or so. But what I'll do is I'll pause this and go back to the daily and see what happened. And then we'll drop back down to the 5 minute. But that was on Tuesday. But generally, when you're trading the weekly chart, you want to be in on the early part of the week and you're waiting for the rest of the week to pay you because you're expecting candles 3 strong move to the downside. So as we see there, Tuesday was a strong move down. Wednesday was a retrace day. Thursday, you see that, right? Thursday was a super payday. I got a piece of this trade on a different yen pair. But yeah, this was the definite payday. And when you have a big drop like this is pretty much where you want to get out. There's not much left to do at this point. And I think Friday was consolidation. Yeah, even a retrace because it dropped so substantially. So if you would not have set a take profit on this trade and just let it run, it was unreal how far it actually dropped. It dropped way outside of the range. Let's see, which is possible again with a weekly trade. And so from our first entry, if you didn't set a take profit on this and just happened to hold through Thursday, I'm gonna go back to the entry. Let's see here. And again, I'm not trying to say this is the norm. It's just what could happen. But at this point, you're talking about, 1 to 12, 1 to 17, all the way down to a perfect bottom. But you only want a piece of this move. Don't try to get the whole move. It's not going to happen, okay? But you can aim for higher profit targets because you are trading the weekly range, okay? So, but you don't want to get too greedy because as we can see, price did retrace all the way back. It spent the Friday retracing, as we see here. Because when Friday opened, price spiked down one last time and then just retraced all the way up. So you definitely want to be out by then. Sometimes Friday, when you're trading the weekly chart, Friday tends to retrace. So you want to probably be out by Thursday at the latest. But if you can get 2 good days in your direction when you're trading the weekly chart, that is ideal. So then it's just a matter of refining your entries and looking for those decent risk to rewards to make it worth your while. So on this daily chart, the best days to trade were Tuesday right here and Thursday right here. Okay, Tuesday and Thursday, 2 out of the 5. If you can get 2 out of 5 days in line with your bias as you're going into the week, that's more than fine, right? So, but again, the best trading day, Tuesday and Thursday. Typically, like I said, you can start London through Asia. Typically, by U.S. session, price should already be underway. So I say you want to be in as early as possible because you're really expecting the day to be solid red or green, whichever your direction is or your bias is. So we'll get rid of these drawings. And let's go to pound yen. Pound New Zealand. Let's get out of the replay. So this is a long example here. I won't do Euro Swiss because one long and one short is fine for this study. Now this one was a bit different because price came back. It did not close solid green. So even though there was a long bias on here and I did take this trade and win it, I went ahead and got out around, I don't know when I got out, but just price came back. Once it hit the range high, and retraced, you know, I was already done. So I'm glad I did as well. Because every time price hits the high of the range, that doesn't mean it's going to automatically keep going and break out. So if we drop down to the daily, let's see what our best trading opportunities would have been. So once again, you saw Monday was a trap day. Monday went down. Tuesday and Wednesday were the best trading days. Thursday and Friday, price retraced. So now that we know that Tuesday and Wednesday were our best days, what would have been our best entries at this juncture? So let's get rid of that. So Monday just would have been a no-go because it was just straight red. So we'll use our replay option and go to Tuesday. And remember I said around Asia open, like 8:30 or so, start looking at the chart. Sometimes the move comes even earlier than that. And, you know, I'd keep it simple. I look for fair value gaps and, you know, price to run away from them as well. Retrace into it and then reject it and start to, you know, really move forward. So this is Tuesday here. So low of the week was Monday. The best trading time, I mean, you could have got in really right here around this daily open would have been ideal. That was at about 6:10 a.m. Eastern Standard Time during London session, obviously. So let's see here. Stop loss, you can put it below the low of the day if you'd like, or low of the week, either way. Um, and like I said, we just leave it to take profit open. I leave it up to interpretation, or not up to interpretation, but just leave it open. Don't set a TP. You know, don't. I wouldn't recommend it. Not for the weekly chart, at least, because you never know how far my price might go. If you do set one, though, like I said, you want to be in, or you want to be out around the range high. So that right there, this second gray line is around the range high. And of course, we have the benefit of hindsight. We did see that it did play out. But I mean, while that's a 1 to 5, like I said, you don't need the whole move. And as well, you could have taken a second entry right here off of this fair value gap rejection. Right there, we see how price retraced into the gap and then it's rocketed out. So at 705, you could have taken another long entry right here, right there. And then as far as stop loss goes, you can give it enough breathing room or put it below these two gaps like so, like that. Just you have to put it in a place where you don't think price is going to go. So below those two gaps would have been ideal. And again, you just let it run. So again, or like I said, if you have to set one, you could set it to the top of the range or close to it. And that trade right there, as far as risk to reward standpoint, was 1 to 7. You know, so it's just dynamic though. It's not necessarily fixed. But so say for instance, let's just say hypothetically, and it will end with this. Well, let's let it play out. Okay, and as we can see, price just continues up. This is Wednesday. Yeah, so through Wednesday, that's USA session. Yeah, there you go. Okay, so it tapped the range high right there. So that would have been our exit. Typically, USA session does tend to reverse for the most part. So you just want to be aware of that. So that's when TP will sit at 10 a.m. Eastern Standard Time. So let's just say hypothetically, if let's say you risk 25 bucks on this trade right here, and it was a 1 to 5. So obviously 25 times 10, I'm sorry, 25 times 5, that would have been worth $125, right? And then this trade right here, though, was, let's say you risk another 25 bucks on this one, but this one was 1 to 7. So 25 times 7 is 175. So you take 125 plus 175, and that would have been a $300 week right there. Okay, based off just based off this one trade right here. Okay, is that life-changing amount of money? No, but it's not bad for, you know, a little side income, $300, right? So this is what you're looking at though: weekly range and higher profit targets, because again, the range in and of itself is bigger. But just be aware that price can come back on you and not to get greedy, because we saw that while the yen pair did break out of the range, the people who are sick are the people who held this trade thinking price was going to break out. It did a little bit, but then eventually, we'll speed this up more now. Imagine you're still holding this trade thinking it's going to go up forever, but then all of a sudden on late Thursday, it starts to retrace and completely take out anyone, or at least substantially reduce your profit. Because, yeah, we're coming in Thursday here. I think Pound had news as well. And then you're seeing your equity just slowly, just all your profit being eroded because price is retracing back down into the range. And this was your exit up here. So when price comes back down here, I promise people were still buying, thinking the price was going to rise, but this was the move right here. So you got to know when to get out. Getting out is just as important as when to know when to get in. This was your move right here. So when you're trading, and I'll pause this now, when you're trading candle range theory, you're expecting price to come inside of the range and have a straight rise, break the middle. You can still enter. Sometimes you can still enter, let's say around here too. This is like the last ditch though. This was the last invitation to get a piece of this move. After that, it's lights out. Oops, that's not 20. So, you could have even got a substantial move right there. So you're more than welcome to still buy around the middle or below, off those fair value gaps. But once you see it bounce off the 50 and then price continuing up, that's it. After this, all bets are off. Okay, it's a little more risky at that point. So, but you had three decent opportunities. This bounce came at 3:35 a.m., so good for London session. So London to Asia session is ideal for trading the weekly range. I like seeing that. Just the earlier part of the day. But like I said, be careful with USA or New York session, because sometimes it can either going to continue or reverse what happened in Asia and London. So, but those were the ideal entries for pound New Zealand. So once again, it was around 4:55 a.m. and then another one at 7:15 a.m. Both of those being in the London session, and 3:30, 3:35 a.m. So London as well. So that's it. So, and like I said, just set your stop loss. Stop loss always has to go to a place where you don't think price will go to, and if it goes to it, then you just lose. Okay, but if it doesn't, then just let the trade run its course, and enjoy the profits. So I appreciate you watching. I thank you for your time and attention, and have a great rest of your day. Take care.